Hey guys, in this video, I'll share how much dividend income our $191,000 portfolio paid us in October and November, and what stocks, if any, raised their dividends. Let's do this! Welcome back to the channel, guys, where I share my investment journey and strategies for financial freedom. In this video, I'm excited to bring you an update on our portfolio income for October and November, as well as the stocks that raised their dividends at the end of the video. Don't forget to support the channel in the best way possible with a smash of that like button, and a click of the subscribe button, and notification bell. And can you tell I'm desperate for some love here? So here's what our portfolio's dividend calendar looks like. And here's October, the biggest quarter we have. November is a monthly payer-only month. In October and November, we received dividends from 10 of our positions: VFV, goeasy Ltd, TD Bank, SmartCentres Real Estate Investment Trust, RioCan Real Estate Investment Trust, First National Financial Corp, Capital Power Corp, BCE Inc, TC Energy Corp, and Bank of Nova Scotia. This is how I'll present our dividends and distributions. I'll go through each one we received, adding up the totals along the way, starting with the smallest payer by percent of total portfolio income. Our smallest paycheck was from VFV, Vanguard's S&P 500 Index ETF. It paid us 80 cents, providing us with such a small number that it translated into 0% of our annual dividend income. This is the last dividend of the year and is 12.7% more than Q4 2023. Whoever said the S&P 500 Index wasn't a dividend growth position? Our second smallest dividend was $4.68 from goeasy Ltd. It provides us with 0.8% of our yearly dividend income. This will be changing in January with our position size increasing so much. Also to note, this is our fastest dividend growth stock. After 2 paychecks, we are at $5.39. Our third paycheck was $57.48 from TD Bank. It provides us with 2.2% of our annual dividend income. Our payout will be increasing slightly, and you know why. TD has been pooped on for far too long now. It is still a Canadian great with consistent dividends being paid for well over 100 years now. After 3 paychecks, we are at $62.87. My fourth paycheck came from my bond-like telecom that's in the pooper, BCE Inc. They paid me a dividend of $133.70. This gives it a weighting of 5.2% of my yearly dividend income. BCE Inc. has a 15-year dividend growth streak that will end next year, since they announced a pause on dividend growth going forward. That was long overdue with current debt levels. After this paycheck, we're at $196.57. My fifth paycheck and second largest of the month was from TC Energy Corp. They paid me $182.39. TC Energy Corp provides me with about 7.4% of my annual dividend income if the dividend remained at the current payout. However, with the spin-off of South Bow Corporation, the dividend is going to be reduced to 82.25 cents going forward, dropping my dividend weighting to about 6.1% of my portfolio. TC Energy will be focusing on more company growth than dividend growth purely. That's why I'm happy to hold on to TC Energy for now and sold off all of my South Bow Corporation shares. At the halfway point, we hit $378.96. Next, I got paid by my biggest bank position. Bank of Nova Scotia paid me $179.14. This gives it a weighting of 7% of our yearly dividend income. Again, the weighting is based on forward dividend income, hence it's weighting higher than TC Energy Corp, despite the lower dividend paycheck. With my sixth paycheck, I'm at $558.10. My seventh paycheck was $120.72 in distributions from SmartCentres Real Estate Investment Trust over the last 2 months. It provides me with 7.1% of my annual dividend income. As it stands, Bank of Nova Scotia and SmartCentres are the only 2 positions in the portfolio without a dividend streak going. This is anticipated to continue for the foreseeable future. With this monthly distribution, I hit $678.82. My 8th paycheck was from another monthly payer, First National Financial. I received $140.32 in dividends over 2 months. It provides me with a large portion of my annual dividend income at 8.4%. It has a 12-year dividend growth streak, a 5-year CAGR of 5.3% on its dividend, and a reasonable payout ratio. With its 50-cent special dividend coming next month, the payout will be quite substantial for our portfolio. With this paycheck, we hit $819.14. My 9th paycheck was from my 3rd monthly payer, RioCan Real Estate Investment Trust. It paid me a distribution of $143.85 over 2 months, providing about 8.4% of my forward yearly dividend income. With such a low payout ratio as a REIT and steady FFO growth, I expect a distribution increase next year, which is the converse of SmartCentres REIT. With this distribution, we near $1,000 at $962.99. Now our biggest, juiciest, most lovely paycheck of the month and of the year was from our biggest position, Capital Power Corp. It paid me $358.93, representing 11.5% of our forward annual dividend income. The reason for the drop in percent of dividend weighting, as revealed in our portfolio update video for these last 2 months, is because I sold 150 shares of CPX, lowering our forward income. So our grand total for October and November is $1,321.92. You know, that's the equivalent of $21.67 a day tax-free, or an hourly wage of $3.76 tax-free based on a 40-hour work week. It's nice to see the year-over-year comparison to October/November 2023. That year we had $1,229.26. So our income grew by 7.5%. We are on track this year for 20% growth between dividend raises, DRIP shares, and new capital deployed. Our 3 largest dividend payments accounted for $720.46, or 55% of our dividend income for the 2 months. My TFSA is built with a focus on the quality of the companies and dividend growth potential for when I'm financially free. I aim for a Chowder score of at least 12 with my dividend growth stocks, not including any ETF or REIT. I never want to be too dependent on anyone's stock in the event of a dividend cut during economic turmoil. I do not hold a concentrated portfolio in any of my accounts, especially not my TFSA. Look at my portfolio breakdown. No one industry, no one stock dominates my dividend income. My portfolio reveal video the other week showed the breakdown of my portfolio by industry. You can have a look in the corner here. Now, a massive part of my dividend income growth is from the dividend raises I receive. So far, I've received 12 dividend increases at an average increase of 7.2%. In the months of October and November, I had another dividend increase, bringing me to 13. First National Financial raised its dividend 2%, giving it a 12-year streak, not to mention the 50-cent special dividend to be paid in December. This increased my forward annual dividend income by $189, including the special dividend, or $17.18 without. TELUS Corp raised its dividend 3.4%, the second increase of the year. That's why I didn't include it, giving it a streak of 20 years. This increases my forward annual dividend income by $21.74. Think of this. At a 4% yield, that's like adding $5,268 of capital to my portfolio. Now that's the power of dividend raises that are absolutely essential to outpace inflation. Here's some other notable dividend increases in the Canadian market in October and November you may want to take note of. TFI International raised its dividend a massive 12.5%, giving it a streak of 13 years. Waste Connections raised its dividend by 10.5%, giving it a streak of 14 years. CNQ, Canadian Natural Resources, raised its dividend by 7.1%, giving it a streak of 23 years. Element Couche-Tard, that's my French accent, guys, raised its dividend 11.4%, giving it a streak of 14 years. Industrial Alliance raised its dividend 9.8%, its second raise this year, giving it a streak of 10 years. Sun Life raised its dividend 3.7%, its second raise this year, giving it a streak of 9 years. And Fiera Capital Corp, a stock I used to own, raised its dividend 0.5%, giving it a raise for the first time in 3 years. I'm happy to have sold it. We ended November with a forward annual dividend income of $9,926 with a yield on cost of 8.21%. I love me some vanity metrics. I'm inching closer to that 10K mark. Let's see if I can make it by year end. Thank you so much for watching and supporting the channel. I'm Mr. Financial.